It's the Black Real Estate Dialogue. Tune in, tune in, tune in, tune in.
Hi, everyone. Welcome to another episode of the Black Real Estate Dialogue podcast. Before we get into the episode, please leave us a rating and review and subscribe on whichever platform you're listening to this on. It'll help us go up in the rankings and reach more people with this message. So thank you in advance for your support. Also, if you want to join the Bread Investing community, you can do so for just $1 for your first week. Click the link below in the show notes or go to blackrealestatedialogue.com. Very excited for this episode today. Here with me, I have Julius and Leslie Awasom out of Maryland. Thank you both so much for being on the show. Really appreciate it.
Thank you so much, Sam, for inviting us. We're certainly looking forward to this conversation, and we're honored to be here. Thank you.
Thank you.
Definitely. So first, could you just let us know who you are and what you do?
I'm Dr. Julius Oni. I am the CEO and co-founder at Excite Capital. And Excite Capital is a multifamily private equity real estate firm that collaborates with our community of investors to acquire cash flowing multifamily assets. And we do that by pulling the resources of people in our community to buy relatively large apartment communities. That's just the easy way to describe it. So we are talking about 100 plus units of apartment complexes or communities. And our target market is in the Southeast US. So think about North Carolina, South Carolina, Georgia, and extending to other parts of the Southeast. But those are the core markets that we've been mostly focused on. So and I mean, in the last 2 years, we've had incredible success partnering with our community, educating our community. And we are super excited to share the story of how that has been so far. Thank you.
And I'm Leslie Awasom, Director of Operations and co-founder at Excite Capital as well. And I think our CEO just went over on what we do and what we're all about. And again, we at Excite Capital created the company because we found a need in the community. And we are out to fulfill that need to continue to educate people and bring the gospel of multifamily to our community.
Definitely. So before we get into real estate, I would just love to learn more about what it was like for each of you growing up, and if you were exposed to anything in relation to real estate or generational wealth, or if that's something that came later down the line.
That's a great question. For me, I was born and raised in Nigeria. Came to the U.S. only when I started college and didn't really know much about the U.S. system. Didn't really know much about generational wealth. Didn't really know. I had my luggage and my backpack at that point, and that was about it. I was fortunate enough to have done fairly well in college and got into medical school. Went straight through medical school and ultimately ended up pursuing a career in orthopedic surgery. So I did my residency in New York, fellowship in Chicago, and at some points started my first practice about 9 years ago in Philadelphia. So I was there for about 3 years. That was finally, after going through all of these journeys of getting to becoming an orthopedic surgeon, I finally started to make a little bit of money. And actually, this is how clueless I was about money. Let me tell you a quick story about what I did with my first check. I was so excited to make that first check that I went and cashed it. Because I just wanted to know what that type of money looks like actually in person, right? And I spread it all over my bed. I'll never forget that day in Philly. And I just jumped in it and just swam in it for a second, and then packed it right up and took it back to the bank and paid it right back into my account. So that's what I did with my first check before I started to think about other things to do with it. But I mean, that just kind of tells you a little bit about, the how clueless I was about and how naive I was about wealth creation and preserving wealth. But very quickly, I'm a quick study. I started to, read up on ways to create wealth, and obviously the most common ways quickly come up. You start hearing about stocks, you start hearing about single family investments, maybe rentals. You start hearing about the BRRRR strategy, right? You start hearing about flips. You start hearing nowadays about crypto. And at that point I was also lucky. One of my younger brothers actually was in the angel investment space, actually started a startup, and I got into the angel investment venture capitalist activities through that. So I kind of, after reviewing everything, I thought that, well, maybe exploring the angel investment space, because I was going to support my brother, and I started going to some of the demo days, and listening to some other companies, and through that invested in a few other companies. But that was like a very high risk, high payout, strategy. I call it spray and pray. You put money in a couple of about 10 companies maybe, and you hope that at least 2 of them become a unicorn, and you make enough money to make up for the entire investment in all 10 companies. So I certainly realized that wasn't the strategy for replacement of cash flow or long term. So I tried to do single family. I quickly realized that I was a bad landlord, and I didn't like to do tenants, termites, or toilets. So and even when I tried to outsource that to property managers, I was still having to actively participate in some senses, because one, the cash flow wasn't what I thought it would be anymore, and second, I was still, subject to making those decisions about, okay, what do I do about this? What do I do about that? If the HVAC machine goes out, that there goes my cash flow for the entire year. So I quickly realized that also wasn't a long-term strategy for accelerated wealth growth. It was around the time, this was already 6 years into practice, that I was trying to figure out what that nice next step is going to be to accelerate my wealth growth, and to also buy my time freedom back, so that I could do some of the things that I really truly love to do. I mean, I was doing a ton of hips and knees replacements, and it was bringing me a lot of joy, but I had many other interests, things like global orthopedics, things like, business and entrepreneurship. And I was trying to buy a little bit of time freedom back to focus on those things. And that's when I met my partner, Leslie, Awasom, who actually is a CRNA that worked with me at Johns Hopkins. And we would just talk about real estate and things of that nature. And it was a fluid conversations. I found him to be very knowledgeable, to be very thoughtful, and very deliberate about his thought processes. So, and he was the one who introduced me to multifamily. And so I guess I'll let him finish that story after he's done introducing his background. But that's pretty much my origin story.
Perfect. Thank you.
Oh man, you've set the bar so high, Julius. all the adjectives. I don't know if I can live up to all those expectations. But again, similar story. I moved to the US. I'm originally from Cameroon. Moved to the US in 2000. Immigrated here just to search for better opportunities. My mom had moved over here, so she brought my family here. And initially, when I came into the US, the first few years, I kind of struggled trying to find my way. Wasn't following the right path, got involved in some issues, had a near-death experience that kind of brought me to light, and I decided to move out of Maryland, go to North Carolina to go to school. I had a car accident where I drove off the road and had a head-on collision with somebody else, had to be airlifted to the hospital. So that experience kind of changed my life, and I decided to go to school and go get a stable career. And the thing I could see at that point was nursing, which is what my mom was doing and was encouraging me to do. So I went to North Carolina, got to school, did nursing, then came back to Maryland to work at Hopkins. And I came back to work around 2008. That was my first year on the job. And I'm going through the orientation, going through all of that. Then the 2008 crash happened. And I'm looking around and I'm seeing nurses that have been in their career for 20, 30, 40 years that are getting ready to retire. Some of them lost a significant amount of their nest egg or to that market crash. One lady was getting ready to retire in about 5 to 10 years. I think she lost about $200,000. The look on her face scared the crap out of me. And I could not understand what was going on. And I kept asking myself, I'm going to get a job, save all this money and lose it like that at the end. Like this doesn't sit right with me. It didn't sit right. So, and at that point, it just came back from signing off for 401k plan. So that thought remained unsettled in my mind. And I was like, I cannot live my life this way where I'm going to spend all my years working, then I lose it like that. There's got to be a better way, but I just didn't know what. Along the way while working as a nurse, I've always had the entrepreneurial mind. I've always thought about business, but never really had the courage to go out and start a business. I tried all the small businesses on my own and with other partners. Needless to say, none of them went too far. So I had some business failures while working as a nurse. So I said, you know what, I need to figure something else out. Maybe I should go back to school, get another high paying job. Then from there, I could figure out what to do. So I went back to school, got an advanced degree in anesthesia, became a certified registered nurse anesthetist. And it's a great job, very great schedule. The pay is good. So first 6 months, I was having a good time at work, getting paid well, coming back home to play with my kids, and I was happy. But after about 6 months, that unsettling feeling came back again. And I kept asking myself if this is where I see myself living for the rest of my life. And it just didn't seem right because it felt like there was a ceiling to my growth. And I'm a growth-minded kind of person where I always got to keep growing. So I started investigating, reading around, came across a book by Robert Kiyosaki, Second Chance at Your Life and Your Money. I read the book and it just stuck to me. Like what he was saying made sense. He explained about the US economy, talked about the gold standard, talked about money and everything. And that really stuck with me. So, and I followed everything that he said in the book. One of the things he said was to invest in real estate, start going out to real estate conferences and network with other business other business people. Did that and bought out my first rental property, had some success with that, and then started researching more on how to scale in the rental. That's when we came across multifamily and decided to go in. And I came to work, and the first day I met Julius at the hospital, I think that was the first day I was in the operating room, sitting in the back where anesthesia providers usually sit, and I hear this voice coming. Hey, how's everybody doing? With so much energy. I'm like, who is this person making so much noise? The operating room is usually quiet. Then all of a sudden, somebody tells me that's a new surgeon that just came, the new orthopedic surgeon. Then he does this thing where he's talking about what we do a timeout. He has this very unique way of doing a timeout. Like, we're going to have a fantastic, amazing, and great day. And that kind of energy, it's very hard to see that kind of energy in a healthcare environment. And when I heard that, I kind of sat up and I looked at this guy and I was like, you know what? I got to make this guy my friend. I got to figure out a way to make this guy my friend. So in the operating room, I'll listen to him having conversations with the other surgeons about his venture capital investments, his real estate investments. And I was like, oh my God, he's a real estate investor too. So I got to reach out to him. So when we started Multifamily, I was reaching out to Julius and saying, hey, this is what we're doing. We have a meetup. You should come and listen. But at that point, he was very busy with other things and really did not pay attention to that. Then one day, out of a blue, like the other partner, Tenny, who is not here, him and I had started looking into the multifamily, and we were stuck. Like, we had done everything we could to our power. We were stuck, and we were asking ourselves, like, we need somebody else to come in and really open the doors and take us to that next level. And I remember, let me tell you an interesting story. We had this experience where initially we had the opportunity to have a deal that we failed initially before Julius joined. And when we sat down on the debrief to talk about what we could do better, I remember telling Tenny, listen, there's this guy I work with. His name is Dr. Julius Oni. I know he will be a perfect fit for this kind of investment. But I tried talking to him and it seems like he's more focused on other stuff. I said, this guy, I know in my heart, he will be like a perfect fit. And about a month later, I got the call from Dr. Julius Oni saying, hey, Leslie, I've gone back and looked at some of the stuff you sent me. Is your other partner available? I would like to talk. I think I'd like to join you guys. And it was so much excitement. Got on a call the first time. Call ended up lasting about 2 hours. Just went back and forth. Found out that we have the same passion, the same vision. And we complement each other so well. And we have the same passion to preach this gospel out to the community, to educate more people, to have more people understand that these opportunities are available for them out there to explore, to change the narrative within our community. One of the things we talked about was there's so much lack of sharing among our community, sharing of information. The transaction cost in our community is so high, whereas if you go into other communities, it's so low. How can we change that? How can we change the way we do business amongst each other? How can we change the way we share information amongst each other? So that's the premise on what we build our platform to become. And I believe that is a fundamental reason for the amount of success that we've had so far.
Love it. Love it. Thank you both so much for those great introductions. And so I was reading on the pitch deck that you guys have about $107 million in assets under management. And so again, large multifamily is something our community it seems like it's almost intangible, right? You see that big building, you see that big complex, and most people probably wouldn't even think me and a group of people I know could own that one day. So can you talk about just multifamily investing in general and why it's something that that the company, you three were interested in? And yeah, love to hear more about the why.
That's a great question. In our dialogue, I had mentioned to you that was one of the main reasons why we felt like this was something that we must do. When we started to go to a lot of conferences, we quickly realized that we were in the significant minorities, not just as underrepresented minorities, but certainly also as healthcare professionals. We were seeing a lot of CPAs, we were seeing a lot of lawyers, we were seeing a lot of MBAs, we were seeing, a lot of finance folks, but we weren't seeing a lot of healthcare professionals. Also, we were seeing a lot of other folks from different ethnicities, but we certainly did not see too many of us. So we quickly realized that, and we at that point already knew the amazing wealth growth capabilities of this large multifamily assets. I'll give you an example. We bought a property in April 2021 for $12.5 million, right? April 2021. In November of 2021, we got a broker's opinion of value. That's a BOV. It's essentially kind of getting a sense of what a broker thinks the property is worth now. And usually in this day and age, typically the property actually sells for north of whatever that value is. Guess what it was? About $17.5 million. Yes, 7 months later.
Wow.
So tell me, what other asset class, right? What other properties, what other asset class is going to do that for you in a below average risk way, in a above average return manner, with significant tax benefits? When we start talking about things like cost segregation and bonus depreciation and all the different tax benefits of multifamily real estate, right? What other asset is tangible, right? Like this. And what other asset also allows you, as you're making money, to be making a significant difference in the lives of other people. You're creating beautiful places for people to actually live. You're improving the value, the quality of people's living conditions, and you're contributing to this, improving their quality of lives, while you're also doing fantastically well monetarily. So, I mean, it just hit all the spots for me. I mean, just from that example alone, but that's what we can do in multifamily. But obviously, when I initially, started reading about this, I would look at a $20 million property or a 100-unit apartment complex. I didn't think it was possible. It wasn't in my realm of possibility to go ahead and acquire that, right? But then after I started learning about apartment syndications and the possibility of us pulling our resources together, all we just needed to do at that point was build the team to do it. And Leslie kind of undersells himself and Tenny, my partner, a little bit, because they're super humble folks, but these guys are powerhouses. And they, I mean, they actually approached me to be a passive investor in a deal. So they didn't approach me to be an active investor, technically. But when I read the deal, and I was like, wow, this existed. And I thought I was a sophisticated investor and was, angel investing and buying single family homes and had a small stock portfolio that didn't do that great, but, still felt like I knew I was doing all the 401ks, 403bs, 457, whatever, all those nice numbers. I was maxing them out, I had my Roth IRA, the backdoor IRA, whatever my financial advisor was telling me to do so that I could get the 1% asset management fee. I was doing, right? But I was like, how come this was not in my realm of possibility? Why was this not, in front of me all this time? So quickly, I realized that there was an opportunity here to educate others about this. And so that was when, in that 2-hour call, when we decided to go on this journey together, we quickly realized that our goal is not only just going to be to create wealth for us and our families. Our goal is going to be to also educate as many people as would listen to us in our communities, our respective communities, and allow them to come along with us on this journey. Because we don't want to be there alone at the top. We want other folks like you, Sam, like other folks like you and me, to be there with us so that we can, in a couple of years, talk about taking down $1 billion building. You and I just be like, okay, well, we'll just bring together a couple of our friends and buy that. Because now that I know it is possible to buy, actually, with the property that we have on the contract right now, will be about $125 million in asset under management. Wow. By the end of this month. So I know it's possible to buy $125 million of real estate in less than 2 years. So for me, there's no end to the possibilities. The sky is not our limits as far as I'm concerned. I think it's just the beginning of our journey. So we have very bold goals. We have very big goals, and we're very clear-minded about how we are hoping to achieve it. And part of that process is what brings us here today, because we got to educate our community. We got to get folks in our community to start to let down a little bit of that guard that we've all been conditioned to have. Like, you have to kind of keep that money in the bank, and walk in and let the bank manager, bow down to you and say hello to you and make you feel a little good about your money that's losing value, year in, year out in that account. The bank takes that money, puts it to work for you, makes about 20% on it, and gives you about 0.09%, in that savings account. And you think you got something. Why don't you diversify it a little bit? Why don't you put that money to work so that it could at least match up with inflation, so that it doesn't lose value? Why don't you put that money to work a little bit, maybe in a syndication, so that you're not only matching inflation, you're surpassing it. You know,
Mm-hmm.
most of our deals have an average annual returns of between 15 and 25%. You have cash flow of at least 7% typically annualized. So, I mean, it's a no-brainer, you know, but obviously it with every investment, there's some risks associated with it. And I completely understand those that are a little bit risk averse, because at least they say, you know, even if I lost the value of my money in my bank, it's still cash for me and it's security. And I understand it. But I do think that beyond the classic, you know, emergency funds and maybe a little more if you need to have that extra security blanket, we in our community need to start learning to put money to work.
Mm-hmm.
And when you put money to work, that money the growth of that wealth starts to accelerate. And for those of us that do have high paying, you know, skill work like me, you know, I consider myself a highly paid skill worker, even as a surgeon. And I cannot pass on my highly paid skill work to my child or to my offspring or to my family when I go. But you know what I could pass on to them? Assets. So yeah, I mean, I could go on about this because I am so passionate about it.
Yeah.
And so, but the fact is we need to wake up in our community and we need to realize that we need to start investing in one, educating ourselves so that we can start getting comfortable with investing in these types of assets, right? And then we need to start thinking that we thinking about collaborations, right? Because you want to go fast, go by yourself, but you want to go far, you go with others. And that's what we've done as Excite Capital, is that we have gone with others, each other first. And then once we've formed that core, that tripod, now we are bringing even further, additional people with us. We're saying, come with us on this journey, if you will. And we will do everything in our power to make sure that we are good stewards of your investment. And not just that, but to also teach you how to do this if you are so interested. If you want to be a passive investor, fantastic. We'll put your money to work for you. You want to learn how to do it and do the same thing? Guess what? We have an abundance mindset. We want as many Excite Capitals out there as could be. We believe there's more than enough out there for all of us to be super happy and super successful. So we are an open book. We want to share what we got. And if you ask people in our communities, they will say the same thing. So yeah, Leslie, you have any other additions to that?
Just to add that it's interesting that when we learned about this, you talked about the banks, like some of the properties that we go after, the competitors that the people we're competing after are banks, insurance company, all the big asset, wealth funds, that's how they make money, by investing in this cash producing assets. And you also mentioned that appreciation aside, this assets cash flow, at least the assets that we buy, the cash flow from day one. So it's a very good way. That's one of the things that I really loved about it. It's a very good way for us to provide a platform for others, members of the healthcare community that work as hard as we do. A lot of us that get to some level of success in the healthcare community, especially minorities, we might be the first in our family that has ever had a job like that. We might be the first in our, so we understand, the struggles that a lot of people go to get to where they want to be. And again, that same thought, that same lady that lost her money back in 2008, so being able to provide another safe platform where people can come and grow their wealth, and you growing your wealth in an asset that you could touch, feel, and see. And some of these assets, even at some point, like our current asset that we have under contract, our business plan is to hold for a few years, pull out the building equity that we're going into the property with it, return the funds back to the investor, and hold long-term for mailbox money. When one of the things I heard about in the US earlier on was like mailbox money, mailbox. I didn't understand what that was until I came across multifamily.
We know
now.
now.
And that this asset class opens up a whole new world of possibilities around you. Like we didn't know going into this individually, doing our own family, we didn't know we could buy $2 million assets or $5 million assets. That's the one aspect of this that is so great, because it's a journey of growth. That is why it connects to me so much, because I am so growth minded. And if I'm not growing, I feel like I'm dying. So this is the right asset class for someone always looking to grow.
Are you looking for a community of like-minded individuals and access to experts in real estate?
Yeah.
Are you interested in real estate but need more support and guidance?
You know who it is?
The Black Real Estate Dialogue presents the Real Estate Investing Community. No matter how much or how little real estate experience you have, we've created a community for you because your perspective is important. All right, tell me, where's the number one place where you can do Q&A with experienced guest speakers 2 times per month? How about unlimited access to past guest speakers' recordings? What about a private Slack channel to engage in daily discussion with everybody in the community to share resources and support each other? Head on over to blackrealestatedialogue.com. That's blackrealestatedialogue.com. It's the real estate investing community presented by the Black Real Estate Dialogue. Come join us today.
Definitely. So can you guys break down your first deal and just help us to understand how something like this comes together? Because I know it's not like, oh, I went to Bank of America, the lender said I could put 3.5% down or 20% down. I know it's a bit more complicated, so feel free to keep a high level too, but I just want people to understand like how something like this even comes together when you get to the large multifamily space.
Right. So, I mean, I'll preface it by just saying something. To really take down these types of deals, you need to be ready to put in extraordinary effort, particularly if you are us, right? And I'll give you an example of an extraordinary effort by one of my partners, Tenny Tolofari, our Director of Acquisitions and co-founder, who is not here with us today, sold his home in the DC area, moved his entire family to our target market, because we had at that point decided that the Southeast market was a market that was actually growing significantly and that we were very interested in. So there was increasing population growth there. There was increasing jobs growth. So it was increasing the median household income there. And there was no rent control. And it was just a business-friendly environment. So that, or the combination of all those things that we saw, including the rent growth that we were seeing in the market, we thought that that was going to be a really great market for us to go to. And without hesitation, he sold his home, moved his family to our target market, and started to interface with the brokers. And to more directly answer your questions, that is where the journey really starts, right? After creating like the community of the folks that you want to go on the journey with, you start making, creating your team of brokers, of lawyers, of CPAs, or accountants, right? For those that need to know what that is, and of, other real estate investors, because this is a team sport, Yes, on some of our deals, we are the lead general partners, When I say general partners, I mean the active folks putting these deals together. And some, we are just a co-general partner. There's another lead general partner taking charge of the deal. So of the 4 deals, for example, that we've done, we are lead on 2 of them. On 2 of them, we were like just co-general partners. So it's one of those things that you gotta be willing to go with a team, right? And go in the same direction with that team, right? So once you've put that team of folks together and you're starting to like show value to your brokers, to all of these teams, to your property managers. So you're going to need a third-party property management company that you are very comfortable with to help with the due diligence processes for these types of deals, right? So just eye level, I'll just go through the process real quickly. For example, that same deal that we bought in Columbia, South Carolina, 132 unit Class C property, $12.5 million acquisition that we bought in the San Andreas area of Columbia, South Carolina. So we found out about this property through a broker that we had been, talking to and trying to, get deals from for at least probably 6 to 8 months prior to us getting that deal. and I mean, the tenacity of Tenny, right, was what kind of led to it. At one point, he drove 3 hours to go meet with one of the broker friends of this broker, right? At a 15-minute meeting and drove 3 hours back home.
Wow.
And the broker just couldn't believe that this guy was that intense, that he would drive that 6 hours to and fro just to have his 15-minute with him. Very shortly afterwards, we got this deal, from one of his colleagues. So, so once we got the deal, now the deal is a $12.5 million deal. Typically, you need to put down a down payment of about 30%, right? And then typically, you have a renovation cost and closing cost that you also have to raise for. So let's say it's a $12 million deal to make it real simple, or $10 million deal to make it real simple. You need to put down, $3 million, right? Then you probably need to raise another maybe 1 million to 2 million for both the renovations, the value add process, because we buying stabilized properties, meaning they're already occupied, at least 90% occupied, and we just adding value to them and getting them up to like market rents. That's what we're doing, right? So we raised the renovation cost, or what we call the CapEx budget, the capital expenditure budget. And then we also raised the closing costs, including the fees and all of the fees associated with that closing, and also some reserve money, just in case we've encountered some surprises. So a combination of that is what we call the equity raise, what we're going to raise to be able to close that deal. And typically, the way we structure it is we put in something called the LOI. That's how, when the broker says, "Oh yeah, check out this deal," and we underwrite the deal, which is another part that whoever is going to go into it needs to understand how to do, right? Underwriting is essentially putting in all the numbers based on the revenues this property is generating, and based on some generally known assumptions to generate exactly what this property is going to do if you implemented a certain business plan. So based on that underwriting, if the property pencils, then we put in the offer, the letter of intent, the LOI, right? Once the LOI is in, if the seller likes it, the seller accepts it. Once the seller accepts it, then we negotiate what we call the purchase sale agreement, the PSA. Once the PSA has been signed or executed by both the seller and the buyer, now the property is officially under contract. The clock is ticking. Typically, there is a certain amount of time of due diligence that we do, and typically it's about 30 days or more or so. Sometimes it could be 45 days, it could be shorter, and then there's a 30-day period after the due diligence period of closing, right? So in the 30-day of due diligence, typically you literally go into the property, you go into every single unit, you're making sure that the renters that were on the property's papers that were given to you are the ones that are actually in the apartments. You want to make sure that the amount that they said they're paying is actually what they were paying. You want to make sure that, that everything matches. You want to go onto the roofs, check the quality of the roofs, the pavements, the parking lots, the walls, the electrics, the plumbing, the storage area, if there is one, the pool area. You want to check all of those things to make sure that you are not going to be surprised, right? And then when that process is done, now you got to do the closing period. In that time, you got to raise that equity. So in our example of $10 million property, now you have you got to raise 5 million, right? So 3 million for down payment and 2 million for all those other costs I said. So you got to raise 5 mil. Time is ticking. Now you got to go into your community and tell them all about the fantastic things about this property. and get them to come together. And what we found is that by educating our community, because while we were looking for this property, we just invested in educating folks and bringing people on board. We realized that people in our community are ready. They are ready. Yes, not everybody is ready, but a critical mass of us are ready to mobilize. Because guess what? On that particular deal that I talked to you about, the $12.5 million deal, we had to raise $5.3 million. And I'm proud to say that we were able to raise it and over-raise on it in less than 30 days.
Wow.
And that just tells you, it speaks to the power of community there. And it's not because of us. It's not because of Leslie, not because of Tenny, not because of me. It's because of every single investor on that deal that believed in the process, that believed in the business plan, that were ready to go on the journey with us, that were ready to take that leap of faith and say, you know what, I'm ready. Because most of them were first-time investors.
Wow.
And the vast majority of them were underrepresented minorities.
Mm-hmm.
So I'm incredibly proud of that. And same thing is probably going to happen again on this current deal that we have under contract that is closing in about 2 weeks. But just to kind of let you know, so yeah, we were able to raise the money, and thankfully we were able to close exactly when we said we were going to close. We didn't need any type of extension. Everything worked out. And guess what? That's the same property that I just gave you the anecdote about earlier that is doing relatively crazy numbers, if you want to, if you would say that, you know. So when you think about the ability to buy and not just take advantage of organic appreciation, but force appreciation, you know, we can actually force it. We could increase value, you know, of these properties, and we could share the tax benefits of that increased value or acquisition of the property with our community of investors. I mean, the testaments we're getting from, or testimonials we're getting from our investors about how this has impacted their, you know, tax, you know, exposure is incredible. Because particularly those that have passive incomes, or those that have spouses that are real estate professionals and as you know, and technically achieve reps status, you know, because when you've achieved rep status, then the depreciation you get from these properties hits differently, because then the depreciation actually can offset your W-2 income, you know, and it's incredible. But I mean, I could go on and on about this, but I'll let you ask more questions. Obviously, I get excited about talking about it. But
that's the energy we need. That's the energy we need. So I have a question for you guys. So with large multifamily, if it's being appraised, I know you mentioned like the broker is the one who does that kind of thing. Is it based, like how is it different assessing the value of a large multifamily than it is for, say, like a single family? Do they look at different factors? Do they look at like the income? Like what are some of those differences?
Let's go for that.
Actually, I was gonna say that, like, for example, right? If you look at it, that's one of the things that got us into this, because when you look at a single family, for example, when you buy a property, the value of your property is based on the average of every other property in that neighborhood. So if somebody comes in and buys a property higher than that, your value automatically goes up. If they buy lower, then you're screwed. And that's kind of what happened with my first single family investment, where the values went up and I was like, oh, this is crazy. But in multifamily, is buying a business. So you control the valuation of your business by how the income that it produces. The math that got to me was in a 5 cap rate market, a single dollar increase in rent is equatable to a $20 increase in valuation. So when you increase rent by $1, you increase the value of your property by $20
in a 5
cap rate market, right? Now, if we do the math on a 100-unit property, for example, like a 132-unit property, for example, the property Dr. Oni mentioned, where we've been able to organically increase rent by up to $170. That is pre-renovation. Now, imagine increasing that rent to all those units, right? And then calculating the value that you create by doing that. So that is why this asset class is so powerful. because you have the control over how the property is valued. So when we go to buy properties, the underwriting process Dr. Julius only talked about is where you actually determine the value of the property. The value of a multifamily asset is calculated by taking the net operating income, that is the total income less the expenses of that property, divided by the market cap rate, right? So when you get the income, you divide it by the cap rate, then you get the value. So now by increasing the income, you increase the value of the building tremendously. If you buy in a market that is growing, like in the Southeast, by the cap rate dropping just a few basis points, you increase the value of your building tremendously. Like when we bought our property in Columbia, South Carolina, we bought it at a 5 cap. Right now, the market is at a 4 cap. That market cap rate plus the forced appreciation that we've been able to create over this past 4 months has created above $5 million in value, right? And this is value that you could transfer over to your investors. And this is what has been happening in the multifamily real estate market for decades, right? It's nothing new. We're not creating anything new. When you walk around, you see all these apartment complexes. It's held in entities like the ones that we create to buy these properties, right? And all the savvy investors have been taking advantage of this over the years. So
for years.
That's why we are so excited that we're able to bring this knowledge to the community. So that's one of the most powerful things about this property is the way it's valued compared to single family.
And that's why now I just tell people, go from, even for those people that say, I'm not ready to go with a team yet. Some people still have that mindset that I have to own, 100% of everything and things of that nature. I'm like, why don't you go for, a 8 unit, 10 unit, 12 unit, because at that point, you are buying something that is actually just being valued based on the revenues that you're able to generate from it, not just based on your credit worthiness or your abilities to buy it. So that's why you may find that some people with a certain level of income only qualify for a certain size of residential home, but they may actually qualify for a larger, what we call commercial. Anything beyond 4 units is considered commercial, right? But they qualify for something larger commercially, as far as the property can justify, the revenues coming out of the property or the potential revenues that are going to come out of the property can justify the purchase price.
Definitely. So deal closes, you raise all the money from investors. Now, who manages the day-to-day? Who manages the renovations? Like, are those team members that you have to have in place before you even get, like, are those things you need to have in place by the time you close everything?
Yeah,
absolutely. You got to have that in place before you buy the deal. So the team building piece that Dr. Oni spoke about earlier is very important. One of the key members of the team that you have to build early on is a property manager. Like, the property manager should be involved from the sourcing process. Like, I'll give an example for our relationship with our property management team, which we created very early on in the creation of our company. Any property that we get in the markets that we're going into, our property manager has to set an eye on it first and say, okay, this is a go before we go ahead and move forward. Because they're boots on the ground, they understand that market better than you do. And they're the ones that are going to be managing that property. Now, when we go to the underwriting process, we run our assumptions to the property manager to look at those numbers and make sure that, okay, these assumptions are not too aggressive or they're not too conservative. And once we get confirmation, now we go back and design the business plan based on the feedback that we have. So you work hand in hand with the property manager. It's very important that you find a good qualified property management team that's going to manage the property for you. And these are not like mom and pop shops, right? You have like businesses that are focused solely on property management. Like our property management company, for example, manages over 200,000 units of apartments over the Southeast region. So these are companies that dedicate their day to make sure that these assets are running well, and they get paid from the performance of the asset, right? So the asset makes enough money to pay for a very professional management team.
Wow.
And you as an owner and operator, what you have to do is manage the manager.
Right.
So I'm the asset manager for our properties, where I set KPIs and goals for our property management in collaboration with our property manager for them to keep up to throughout the years. And I monitor those KPIs and monitor those goals as we go along. So that is one of the strong advantages of this asset class. We don't have to manage it like we did with a single family where you have to do it yourself. Here you have qualified individuals and the property pays for it. You underwrite a property, make sure all those expenses are underwritten, and the property has to cash flow after all those expenses before you go and buy it. So you're buying a property that is cash flowing and paying for itself and then creating wealth for you. So that is why this asset class is so powerful. That is why it's the choice asset class of a lot of savvy investors.
I've also learned to like make sure the property manager is super excited about the deal. Anytime our property managers are just jumping up and down about a deal, then I would definitely want to get that deal. Then I'm like, okay, let's see what we can do to mobilize to get this deal, because when they get excited, they see the value, they see all the different things that they can improve, they see all the values they can add, they see the potential in the building. They've been doing this for a long time, and there's definitely a lot of value in that. So yeah, but you definitely need a very strong property management team, and we are blessed with First Communities Management, who we work very closely with.
Definitely. So I know that you all have properties in Georgia, I believe DC, and of course South Carolina. Can you talk about expanding into new markets? Because those are, of course, 3 different places. Still Southeast, but different parts, right? So talk to us about expanding to different markets. I know previously you mentioned some of the indicators. So you saw job growth, you saw median income growth, population growth. So was it pretty much the same things that brought you guys to the other new markets?
Yeah, definitely. But then real estate is very hyper local, right? So and even in markets in general, you may find that in some very small pockets you find these gems of properties, and with that meet all the different metrics that obviously we're not going to spend all the time talking about here, but a lot of those metrics that we look at, wait, is this property already maxed out? When compared to other comparables in the market, is it right? Are the rents already above market rents, or are they significantly below market rents? Is there meat on the bones, like Leslie likes to say, which means are there like classic units, or are there things that we can improve on, that would attract the tenant that we are that would appreciate those things and be willing to pay just a little extra for them, that kind of thing. So and in addition to that, we're looking at, obviously the population growth in the area. We're looking at the diversity of employers in the area, because you don't necessarily want to go to a place that, yes, is booming, but it's just one employer, because the day that employer go bust, then your apartment complex goes bust too. So, so you want an apartment complex with a diversity of employers, with a diversity of folks. You want median household income that supports the rent that you are generating and that you are projecting to generate. You want a trend of growth in that. You want a trend of growth in the population. You want a trend of growth in the market rent. You want a trend of growth in the household income, and all of these things combined to make for that ideal property for us, I think.
Yeah. And we are expanding, looking at the Sunbelt region, because like Julius mentioned, there's a huge southern migration. We're also looking into Florida and Texas, and hopefully we'll have something in one of those markets soon.
Definitely. And one thing I'm picking up is that, and I think this could be applied across the board, is y'all are very specific, very analytical. Like you're not just winging it. you're doing the research, you're doing the due diligence. And of course, like when you're talking about 10, $12 million in plus properties, like there's a lot more at stake. So I think it makes sense that you have to, you try to hedge as much as possible and make sure that everything makes sense for you all and for the investors before moving forward. So that's just something I don't want people to miss, because, you're not just, oh, we see 100-unit building for sale in North Carolina, let's raise the money and just throw it. It's not going to work. So I appreciate that you've both broken it down so specifically into like what you need to do if you're trying to invest at this level.
And just to add to that, right? I know we say a lot of what we say with a lot of excitement because we love this asset class, but it takes a lot of effort on the back end to put these deals together and to get it work. For example, it took us underwriting about 200 deals for us to be able to get the deal that we have under contract right now. So it's not every deal that you see being sold you should go buy. The numbers have to make sense. So multifamily is all about the numbers. If the numbers don't make sense, if the property does not produce enough income to give the returns you want to give to your investors, then that's not a property you should be buying. And it takes a lot of work to find those kind of germs that we find to be able to get the returns that we want to give to our investors. So there are a lot of deals out there, but not every deal is the right deal for you. So it depends on what your goals are, your return goals are. So I'm glad you brought that up. It does take a lot of effort in the back end, but it's not impossible. We are not like some rocket scientists or some aliens that came from nowhere, we're ordinary guys like anybody else. So any one of you can do it, put in the same amount of effort. And again, our platform is open to anybody that wants to learn to push them in that direction.
Absolutely. I mean, kudos to you for bringing that up. Certainly. I mean, we are avid learners. We just love to learn. I mean, I can tell you, if you see the text thread between us partners, it's constantly like this podcast, this, Linneman letters, this, this is like, we reading about economists, forecast about multifamily for the next 3 to 7 years, because we want to continue to challenge our assumptions, because we don't want to be caught flat-footed, So because of that, we've taken some of the analytical skills we learned from our respective professions. Our third partner is a cybersecurity professional. Leslie is a CRNA, I'm a surgeon. So we combine all of those things and we transfer some of those skills into real estate too, and we apply it. The same dedication that I put into becoming a surgeon, I put it into trying to make sure that any property that I bring to my community of investors, because those community of investors include some of my best friends, it includes myself, it includes my family members. So I am doing everything in my power to make sure that that property, I could say with a significant degree of confidence, an amazing degree of confidence that this one is going to do well. Even if it does not do as well as we are projecting, it will still do so well that you will be very impressed. Our mantra is that we want to under-promise and over-deliver. And I think so far we have done that. And that's there's something to be said for the work that makes that happen.
Definitely. So can you talk more about like the meetup? You mentioned a couple of times, so the meetups that you have going on. Can you talk more about that?
Yeah, so every Monday, first Monday of the month, we have a monthly meetup. It's called the Exciting World of Multifamily meetup, and it's been growing for the past 2 years. And when we bring in industry experts to talk about everything multifamily related, but it's not just limited to multifamily topics. We talk about personal development topics, because you have to have a strong mindset and you have to have drive. You have to have determination, tenacity. You have to have consistency to be able to kind of perform in this world, and even to be able to get your mind to the place where you are ready to start investing in multifamily real estate you need all of those qualities also. So we in our multifamily meetup, we've invited all the industry experts, all the common names you hear in multifamily, just to talk about, you know, the topics, everything from cost segregation, which is a strategy to get significant depreciations in the first few years of investing in these properties, to things like investing from your self-directed retirement accounts, because people don't know that you actually could do that, but you don't have to bring the money just from your bank account. You actually can invest from your self-directed account, your solo 401k, SDIRA, and others. We have everything from mindset coaches who come in and really got to get our community pumped up and ready to go. And sometimes one of us partners or all of us would also present and share some of our stories, share some of our struggles, share some of the lessons that we've learned along the way. And if from the feedback we've been getting, people have been blessed, and it's probably one of the most diverse meetup you will ever see. We get people from internationally to from all over the U.S. and
wow.
folks really get engaged. And for the first time this past Monday, we had our first Zoom troll. So that was a first. Yeah. So, but for the most part, it's been incredible. And soon enough, as the world opens up again, we're gonna go into maybe a hybrid version of it, where we have people actually meet up in person, or alternate it, do one Zoom, do one in person, and things of that nature. But it's in flux. And also, in addition to that, we have a Tuesday underwriting class every Tuesday,
Wow.
run by our wonderful Leslie Awasom. It's free, just for you to come in, learn about underwriting as much as you want. You get to see how all of these properties are like underwritten on the back end. So, and if you're interested in that, that's something great. We also have some investor dinners that we do in different cities that we visit.
Wow.
We've done it in Atlanta, we've done it in Baltimore. Yeah, I think we got New York coming up soon. So, I mean, and this investor dinners are like amazing. It's not just for our people who have invested with us, but even potential prospective investors. We bring cool people, like-minded people in the same room, breaking some bread and just fellowshipping and just, getting to learn a lot from each other. And you get a lot of incredible insights from these people. And then we have our newsletter that goes out every time. So we have a VIP investor club. If you go onto our website, excitecapital.com, you click on the join the investor club, you get to see our deals for the first, as soon as they come, you're the first person who gets them. So we have different things available for different folks, depending on what their interests are. But thanks for asking that.
Definitely. I have a whole lot going on. Man, this is wow. This has been a great interview. Feels like it's been a masterclass on large multifamily investing, and which is great. That was my intention, selfishly, but of course, in all seriousness, for everybody else too.
Awesome.
But
awesome.
Yeah, I mean, it's been great just to hear about the journey. And one thing as well is just a collaboration too, because a lot of times, like, people who look like us, we're socialized to not want to work with each other. So I think it's great that to see the example with the three of you, that you've been able to collaborate, that you've been able to help other healthcare professionals and people in general, your family, your friends, be part of these investments. And so, I'm excited to hear about the future. I'm sure eventually it'll be 500 million under management, $1 billion under management.
Yeah, man, we're going to 5 bill. 5 bill before we would take a breath.
Yeah. That would not surprise me at all.
Thank you.
But I mean, it's been a great interview. Where can people find you and keep up with what you have going on? You mentioned the website, but just mention it again, and any other resources or how they can access what you all have going on and stay up to date.
Thank you so much. I really appreciate that. Yeah, people can find us on xsitecapital.com. That's XSITE capital.com. And you can also check us out on Instagram, Facebook. My email address is juliusoni, JULIUSONI @xsitecapital.com. So feel free to reach out to me there. And Leslie?
My email address is LAWASOM @xsitecapital.com. And again, reach out to any one of us if you have any questions or interested in being part of any of the groups. We'll be glad to have you.
Definitely. And then is there anything you want to leave with listeners? Any advice for people who want to get into multifamily investing or want to get into investing in general, and maybe they're just a little bit hesitant? What would you say to some of those folks?
I mean, for me, I would say the journey of 1,000 miles starts with the first step. You know, the best time to invest in real estate was 20 years ago. And the next best time is now. So if you are still thinking about it, if you're still not sure about it, well, guess what? You don't necessarily have to pull money out of your pocket and start investing today, but you can start educating yourself, you know, and you could at least take that step, you know, read some books, you know, Wheelbarrow Profit by Jack Stanziano, Gino Barbaro is a good one. The ABCs of Real Estate and Self-Investors, you know, a bunch of podcasts out there. Just type in multifamily real estate. There's going to be 1,000 podcasts that comes out, and you can just pick and choose whichever one you want to start listening to, and just kind of listen to them and keep an open mind. And eventually, you'll be very surprised at what starts to happen to you, because once you will start to learn the lingo, you will start to kind of understand, you know, how the process works. And before long, maybe you'll eventually get to a point where you are ready to start investing. And maybe at that time, you will consider XI Capital as a partner in your wealth growth and in your mind growth. So that would be my message to the folks. Les, you have any?
Everything Julius said.
He's like, you got it, man. He's like, I can't. He said, I can't top that.
Brother. Yeah, but Sam, it's been an honor to be on your platform. We really appreciate you giving us this time. We really appreciate what you're doing also with Brad. Certainly, when I looked it up, I was like, wow, this is incredible that you birthed this. And I mean, just like I told you before, just the consistency is impressive. And for me, consistency beats intensity any day. So keep on doing what you're doing. And I can't wait to see you grow even further. And hopefully we'll be able to collaborate on some multifamily one of these days.
That would be amazing, man. That would be amazing.
Yes, thank you, Sam. We appreciate
you.
Thank you for having us on your platform.
Of course. Appreciate you guys too. Definitely looking forward to putting this one out. And thank you again to everyone for listening to another episode of the Black Real Estate Dialogue podcast. Again, please make sure you leave us a 5-star rating and review. Also subscribe wherever you listen to podcasts. If you want to join the Bread Investing community, you can do so for just $1 for your first week. Go to blackrealestatedialogue.com or click the link below in the show notes. Thank you again. Look forward to hearing from you all soon. Hi everyone, Sam here from the Black Real Estate Dialogue. Make sure to hit that notification bell and that subscribe button, and to visit us at blackrealestatedialogue.com.